What impacts how much you qualify for when you're buying a home? We're getting a lot of questions right now. A lot of people obviously know about what's going on in the market with home values going up and interest rates being great. And so there's more people that are having the ability to buy a home with tax returns coming out, more money available. So what is it that impacts how much you qualify for? One big thing right now, especially this last week or two, is interest rate. So the lower the interest rate, the more you can qualify for. We've seen rates this week start to go up. The market's shifting. There's a lot of volatility going on. And so that maximum that you could go up to for qualifying is now starting to shrink a little bit. So if you have questions around that, let me know. But the other things, there's three more things that impact how much you can qualify for: your credit score, your income, and the amount of down payment that you have available. Your credit score is going to help determine which program it is that you can qualify for, and also what debt ratio you can go up to. If you have a better credit score, there's more flexibility on the debt to income ratio, meaning you can have a higher monthly payment. Lower your credit score, the more limiting that maximum payment is going to be. Your income. Now, this is a big thing that a lot of people ask, well, Kit, if I make this much money, how much can I qualify for? That really depends, because based on your income, there's not a set chart, because your debts are going to be a little bit different than someone else that may make the same amount of money as you. So your income compared to the amount of monthly payments. So if you make $120,000 a year, that's $10,000 a month. You can qualify for about a 45% debt ratio, which means about $4,500 a month could be your total monthly payments. Now, if you have $4,500 of monthly payments on other debts besides a home payment, one, you shouldn't, because that's a lot. But two, the amount you're going to qualify for is nothing. If you have no debts, no other payments, then you can use all of that money towards buying a home, towards a mortgage payment that you could potentially afford. So it's going to be a little bit different for everybody based off of the income and the debt structure. The income, we're looking at what's your base salary, are there variable pieces to it, are you self-employed? So the calculation for your income might not be exactly what you're putting into your bank every month. It could be a little bit different. So there's some questions that go around that, and everyone's situation is a little bit different. For down payment, if you have a bigger down payment, then you open up more options with different loan programs, better interest rates, and you can afford more home than someone making the same amount of money as you, but with maybe no down payment. There are no down payment options, but it's going to limit how much you can qualify for, because you don't have a bigger down payment or any down payment. So those are some things that are going to impact how much you can qualify for. So if you have questions, want to go through numbers and just set up a game plan, please reach out to me, but be aware of the things that can impact and drive how much you can qualify for. Other thing, in the email, click on the link to register for my investment class. So Rental Properties 101 is the name of it. So just kind of the basics and fundamentals of how to build a real estate portfolio and start having homes as rental properties. So that's coming up. That's March 18th. It's a Thursday evening. Click on the link to register. Share it with a friend if you know someone that might be interested. And hit me up with any questions. Thanks.